a lot of traders keep asking if there is a consistent strategy that you can actually use to trade gold and be consistently profitable. The truth is that yes, a 100% very simple strategy that you can actually use to trade gold and at least get up to 89% win ratio as well, provided you follow every single rule in the strategy. Now, when it comes to trading gold with this strategy, the first thing you need is simply you need a reliable broker, a broker that is actually assured of your money, not broker that you deposit money and then they will run away with your money or something like that. So if you are looking for a broker to actually trade with where you know your money is 100% safe, then use Light Finance. Light Finance is one of the best trading brokers out there. They have one of the best spread, very low spread, and in some pairs you even get zero spread at all. So guys, in case you are looking for to sign up with Light Finance, then the link will be down in this video description, and I also pin it in the first comment. So do well to check that and sign up with them using my link down in the video description. So guys, now this kick to the side. Now let's get back to our chart. Now here you can see we are into our trading view right now, and let's actually analyze this market together. You can see I'm into gold spot, US dollar, XAUUSD. So when it comes to trading gold, the first thing is basically understanding the market trend. Gold is a trend-based market. Like unlike other pairs, gold actually trade with a particular pattern, and this pattern contains only two things: a trend and then a key level. And in our situation, the key level we are after is basically the supply or demand level, and the trend is the usual trend, which is uptrend or downtrend, that we need to understand before we get into the market. Now for example, we are into gold at 30 minutes, and the first thing you need to do is simply, depending on how you particularly trade. Now I take my trade on the 30 minutes, however this strategy can work on wherever time frame that you are going to trade, whether 5 minutes, 15 minutes, 1 hour, 4 hours, it doesn't really matter. But let me share with you a typical example on how to actually analyze the market with this strategy. So first I'll come over to the 4-hour time frame. Okay, I went to 4 minutes. Let me wait for it to come up and then change it. Let me come over here and then let me change it to 4 hour. Now the reason why we're on the 4-hour time frame is that we want to first of all see which direction exactly is the market moving to. When it comes to trading gold main movement is decided by the higher time frame position. So it's very advisable. So whether you're going to trade on the 5 minutes or the 1 minute, it's very important to know the long-term trend of the market. Now since I'm going to execute on the 30-minute time frame, I'll take a look at the 4-hour trend. If we look at it on the 4-hour right now, we can clearly see that what gold is actually moving to the upside. You can see a clear upward trend with market structures being changed around here. Now with this confirmed, the next thing we need to do here is simply go back to the original time frame we want to trade. Now since that I've confirmed that gold is on uptrend, now I'll go down to the 30-minute time frame, which is the time frame I personally want to use to trade the market. However, if I'm to trade it on that particular time frame as well, I need to make sure that what I'm only looking for buys and not sell. Since the market is an upward trend, the best thing is for you to focus on the market direction and not try to challenge the market direction. So for that, we'll drop down to our 30-minute. So I'll just type in 30 minutes. Now we'll come back down to the 30-minute time frame. Now you can see now that we are done in the 30-minute time frame, now all we are basically trying to identify here is simply where the market made some reasonable moves. So this could be very high impact move whereby the market creates new structures and things like that. Now if you take a look at it, around here the market actually gave us a shift to the upside. So from here the market gave us a market shift to the upside, so we'll have to mark it as market shift, also known as change of character if you are already used to the SMC terms. Now after this, once we have the change of character marked out, the next thing we need to look at for simply we need to look at for supply and demand levels, because we are not going to trade off gold randomly. We can't just enter at any random point. We need to identify where the market is moving to first. Now looking at this, we can basically say, okay, here we have a demand level right here. And why are we considering this demand level right here? The reason we are considering this demand level right here is not just because this is a demand level, but because there has been a massive movement away from here. So wherever you see this sort of impulsive move from a level, it means that that is a key level that whenever the market comes back to it, the market is surely going to respect it. Now with this said, now once we have this like this, now we will basically wait for the market to trade back to this level and then we go in. So now let me just play it and see when the market comes back into it. Now apparently you could see the market did not come back to this level, it just shot upward. Now this doesn't mean that what you failed or something. Now the truth is that when it comes to trading this strategy actually helps you filter out a lot of rubbish trade. So in order to filter all of those trades out, you miss out some opportunities. Like for example, this one now we missed the earlier session setup that we had. So the next thing you do is simply you follow the trend. Now after here, what else again? Now we look for a different demand. Since this demand did not get triggered, we look for a new one. And if you look at the market here again, there's another impulsive move away from here, which led the market to create this demand right behind here. Now you see we have this demand right here. So basically we are still following the market trend, so that is the most important thing. Now we'll mark it out fully and then cover it up. Now let's play the market movement again. Now let's see if the market comes into it. So guys, now you can see that even this level did not get triggered and the market has shot upward. So the next thing we need to do is simply we need to identify the next available level. And looking at the next available level here, this level is right here. You can take a look at this level right here, which is very clear also. Now we'll have this level right here, and we'll basically wait for the market to come into it. So now let's play to see if the market comes into it. Okay, the market just printed a new break of structure. So we'll have it right here. A new break of structure has been printed by the market. Now let's wait for the market to come back into it. So let me just take it backwards a bit. So let me take it back here. Now back here now, let me just play it one after the other. Now you see, immediately the market taps into it like this and then rejected off and they give us this bullish close here. This becomes our buy. Now let me just cut these two candles off. Good. Now you see, immediately the market tapped the level like this and it gives you a bullish close. This bullish close, regardless of the time frame you are trading, becomes your entry. So for example, once it comes here like this, we'll set our entry right here. We'll mark this top here as the entry where the market closed, and then our stop loss behind here. And one of the best things you can do is simply look out for a 1:2, and at times you can be a little bit greedy and then look out for a 1:3. For example, let's keep it as a 1:2. Let me just go for a 1:2.3. Now let's take a look if the market actually plays out. On average, I will always advise to go for a 1:2 if you are trading gold, because gold is a very funny market, and the quicker I get in and get out is the best you can actually do for yourself. So 1:2 is always highly advised. So basically now let's play it and see what happens. Now you can see the market smacked the 1:2 plus. So originally a 1:2 will even be down here, and you can see the market just went above. Now you can see that the market has mitigated this, and then we've taken this first trade, which is our first win. You can record it down. Now basically we play on and then look for another entry again. Now you can see the market is still shooting upwards, and if you look at this line here right now, the only available level we could see here is this one right here. This last bearish candle before the market shot upward is the available level. Now here is one thing you need to know. When it comes to identifying your demand levels, you use the last bearish candle before the bullish momentum. So you can see the black candles here are the bearish candles, so those are the ones you use to identify your levels. Now after I had that, then the blue candles here are bullish. I made it like that so it will be easier. So the next thing is simply wait for the market to trade into this level. That is if it comes into it. If not, we hunt for another level again, because the market can be really funny at times. So now let's see. Okay, the market tapped into it. Did not give us a bullish close until it came as high as here. I see the only bullish close we got was very high here, and it doesn't worth taking this trade because that was too far away from the level. Now let's see what happens from here. If it plays out, good. If it doesn't as well, you see, when the market closed very far away from the level, what did you see? The market actually got dumped out and then bounced back into its usual movement again. Now let's see what happens from here again. So let me just zoom it in. Let me see if this one gets respected. So let me just forward it one after the other. Okay, it has been tapped. Now boom, we did not get our confirmation, which means that what we are not taking the trade. Now basically let me keep playing it one after the other. Now gold actually have a lot of these fluences, and you know that we are not looking at fundamentals here, so some of the candles could be created by fundamental reasons. Okay, still trading downwards. So it looks like we have an area of interest here, and then another area of interest here to sell gold. That's if they get respected. So we have to sell ideas here. Now let's see if any of them get respected. got broken, so I'm not taking it either. Now let's wait for the next position to take. So basically no level created here, no level created here. So let me just get this off and then let's play it and see if a new level can be printed. So since that earlier level did not hold up, now let's see if this new one gets hold up. Now let's play it gradually. Now let's see if it gets tapped. Okay, it finally gets tapped, and then I see the market got tapped, rejected, and they gave us a bearish candle here. Now basically we cannot go in for a sell in this scenario. Now let's just take it from here. Our stop loss, okay, that's pretty much okay. We'll aim for a 1:2 as usual. And let's see if this one gets played, if this one plays out as well. Here's a 1:2 as you can see. Now let's see what happens from here. Okay, so our 1:2 got triggered. Now we have two trades with 2 wins. That actually took us a lot of patience to actually achieve. Now basically that one is done. Now let's look for another one. So apparently gold is dipping downwards. That level is also ignored. So now we just clear everything off and then come back to the 4-hour time frame. Now these are the strategies. You have to be patient in order to get good trade. And the truth is that you can see some examples that we've gotten already. When we got those trades, there was no stress. They went straight to our TP. This is because you have to follow the rules carefully in order to achieve those goals. Now apparently where the market is, it looks like an area whereby the market can make reversal. So basically we still hold up and then go back to our 30-minute time frame and see what we can actually do here. So looking at it, the market keeps going downwards. You just have to look for the next sellable point, which is right here. So here is a new supply level created, so we'll just mark it out and then have it right there. Now let's see what the market does to it. Okay, so market is around it. It did not mitigate it, so let's play it gradually and see if it finally gets mitigated. So you can see the market actually mitigated here, gave us our close. Now what do we do next? We basically mark, here will be our entry, our stop loss. So this one will be under huge stop loss, but then it could be managed. And then our take profits down here at 1:2. Here is 1:2 again. So let me just keep it here. But our main target is 1:2, as we all know. Now let's see what happens. So this one actually failed. So this one failed, so we'll just clear it off. And then we'll look for a new opportunity. So not all of them will play out. So far we've had 3 trades, 2 wins and then 1 losses. So meaning we are still on top. Now let's play up and then see. And remember, the 2 wins that we had a 1:2 2 times, so that is plus 4%, and we had a -1 right now, so plus 4 and then -1, meaning that we are currently up plus 3%. So we are currently up plus 3%. So we have that in mind, and then let's play on and see. So meaning we are still up times 3. Now next up, here is a new level that just got created, which is very clear. Now let's see if the market comes back to this one. Okay, now I'm just going to get it slowly into it. Let's see. Okay, it's coming close. Now I'm just going to play it slowly so that we don't get to miss it. Okay, it still hasn't tapped it. Quite interesting. Now let me play it. So this level is still getting respected. Let's see what happens. And market came down, but then eventually broke it. So meaning we don't have a trade here as well. Now we'll just close it off. Now the market bias on the 30 minutes has changed to the sell side. So basically this is how you just have to keep tracking the markets. You get your opportunity, you take it. You don't get your opportunity, you let it be. Now let's see. Remember, we have an unmitigated level way down here alongside this possible sell-off point. So now let's see what gold does to us here. You can clearly see that here they had, which news was that? Let me open it up. We have job openings. I believe after job openings, it could be what next? Then here we have core inflation rates, and then all were core inflation rates actually. Now let's see what happens to that as well. Now let me play it to see if it gets mitigated. Candle went deep in and then eventually broke it, meaning we don't have a trade there as well. So guys, basically this strategy is simple. You identify your level, you get your actual confirmation, and then you take a trade. So if you don't have an actual confirmation, you have no business with executing any single trade in the market. So you need to understand this whilst trading this strategy. A lot of you, the main reason why you are not profitable is basically because you want to take trade every single time and every single minute you come into the market. If you have that idea, I'm sorry, you are not going to get it with this strategy. But with this strategy, if you are patient enough and then really go for trades that actually follows the system that I just shared with you right now, then you are highly going to be profitable with it. And let's see what happens here. No real focus here. However, this area doesn't seem impressive, but then we could mark it out and see if the market eventually respects it. So let's take it back. The level didn't sound impressive, but market came to it. Most important thing is that it was a demand level, and did the market respect it? That is the question. We had a close here. So basically, let me take it back again. So the place got triggered, the market closed above, and then we have our entry, and we just adjust it to fit in. And then 1:2, not going above here because that is a recent high. So now let's see. So 1:2 also delivered here. Now remember, we were up 3% before. Now we have another 1:2 successful. So we've taken how many trade? 4 trade, and we are up 5%. So basically now we go back again. So that is +5. Now we are up +5. So we are up +5 currently. Now basically so we've taken how many trade? 4 trade. So 4 trade. Let me just write it. 4 trade, which is 40. 3. So 4 trade, 3 wins. Now let's see if this new area gets respected as well. Let me just play it into it as well. Let's see if it gets respected. Did not get respected. You can see the market broke out of it, so which means it wasn't respected. The market broke, so it wasn't respected, as we all can see it. So guys, this is basically this strategy. Simple and straightforward. One of them, you understand the market direction. Secondly, you identify a supply or demand level. Thirdly, wait for the market to come into it. And then fourthly, wait for the market to give you a confirmation and you take your trade. It's really that simple. So guys, if you have any question regarding this strategy, you can let me know down in the comment section and I'll actually look into it. So guys, see you in my next video. Bye.